Yesterday, my partners and I, we decided to sell a piece of real estate that we purchased in 2015, February of 2015. It's been 3 years that we've owned this property. I want to talk to you about equity, which is like your goose that lays your golden eggs being rent checks every month in the mail. And then also I want to talk about the 1031 exchange, which the tax code allows you to not pay taxes on your capital gains as long as you continue to purchase rental real estate. We've had this property for 3 years. I put $50,000 in. 3 years later, my equity is up to, if we were to sell, my $50,000 has become $116,000. I made $66,000 of capital gains. If you sell and you take that profit out and you touch it, now you're going to have to pay tax on that $66,000. And one of the things you want to learn about wealth building is you don't want to lose your capital. You want to take as much profit as you can and put it back into more real estate. That's how you're going to build more wealth for you, for your children, for your future generations. It's also going to increase the amount of profit that you're making every month off of rent. So what we're going to do is sell it. We voted to sell it. And I will not touch the $66,000, and I'm going to leave my $50,000 in there as well, and it's going to go into the next property. That way I'm going to have more equity, I'm going to have a larger share of the profit that we get every month, and I'm going to continue to do that for the rest of my life, just property after property. My $50,000 became $116,000. That's more than 120 something percent return on my investment divided over 3 years. What's that? About 40% per year that I was making off my $50,000 investment. But that was just the equity alone. Also remember that I had cash that I was getting every month. I was getting about $400 every month. So my $50,000 was also making me 10% cash flow every year. So if we look at the 3 years, I've been making about 50% profit every year on my $50,000 investment. That's really great. Just continue purchasing real estate. Continue to purchase more and more real estate. Your goose is going to get bigger. You're going to buy more property, and you're going to have more capital gains. You're also going to have more cash flow every month, and that's what I live off of. I live off of cash flow. This 1031 thing, I know I've talked about it before, but you really need to pay attention to this. The tax code allows you, as a real estate investor, to purchase property, and when you sell it, as long as you don't touch the capital gains, you can go into another property for the rest of your life until you die. When you die, your taxes that you didn't pay will die with you. So your children will inherit all of your property, all of the cash flow, all of the equity, and they will not owe tax either. The tax dies with you. So just that $50,000 was also my bus money. That was from driving a bus. So I really urge you, continue to purchase property, continue to do 1031 exchanges, and try to reduce your living expenses so that you can live off of the cash flow that's coming from your rental properties.